The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Welcome to the COB this Friday, the 21st of June. I'm Juliette Sarli. Let's have a look at where we are finishing up the week's trade. It has been a pretty good session today on the CBO 200. The ASX 200 also having a little bit of rally into the latter part of the day's trade. It's up by about 0.2%. When you look more broadly at the market action, it's been a day where most sectors have moved higher, a little bit of weakness in the mining and industrial players, but overall a pretty good finish. And we're up about 0.8% overall on the ASX 200 for the week. When it came to the themes that really took our attention today, it's all about this sluggish spending, consumer caution, if you will. Now, we heard from KMD Brands, which of course owns Rip Curl, Kathmandu, Oboe Shoes, among others. They're seeing in particular the start of their very pivotal winter spending period down about 11.5%. Now, you also heard from Mosaic, which has the brands like Noni B, and they're also seeing consumers really pull back, and that's going to impact its bottom line. So certainly starting to see the effect of these high interest rates on the consumer, which we know has been coming for some time, but when people are not even spending up at the sales, then that does give you a little bit of an indication as to how the overall economy is faring. CBA rose to a record high, so it's a battle once again between the biggest bank in the country and the biggest miner, BHP. CBA just a whisker away now from topping BHP as Australia's most valuable public business. So that David and Goliath battle, if you will, continues. BHP just taking the slight edge, but CBA continuing to hit these records despite the fact there are so many broker calls out there to sell this stock. People saying, look, it is quite overvalued, but it continues to be bid. And then looking across more broadly on the macro picture, seeing the yen continue to slide against the US dollar. Great news for anybody who is thinking of course, going to Japan, which seems to be every second person I speak to. But we saw inflation for May in Japan miss expectations. So that actually saw the yen slump near this multi-decade low against the greenback. All right, let's have a quick look at some of the sectors that we were focusing in on. We've got the miners, of course, pretty mixed there. Fortescue coming off a little. Mineral Resources was a stock we were watching as well, but the big one's looking good. We talked there about CBA hitting a record, but just pulling back on the close, $127.54. The other banks looking pretty mixed today. And the energy stocks there did look quite good. We actually saw global oil prices climb during Thursday's session. The US Energy Information Administration reporting that crude inventories were down 6 million barrels last week compared with analyst expectations for a decrease of almost 2 million barrels. And just having a quick look at some of those top corporate stories, Pilbara Minerals, one company in focus, updating its potential production guidance for its West Australian lithium hard rock mining operations. Analysts raise a couple of concerns about this. Its share price fell 3.5%. Guzman y Gomez, of course, had that stellar IPO yesterday. I think we ate through all the puns relating to that. But of course, Morningstar valuing the stock at only $15. And it looks like a lot of people really just made a quick buck on this because the stock fell something like 10% on the open. It's closed lower by 4.3%. I just had a really fascinating chat with Liam Short, which you can find on the website shortly. He was talking about people that potentially bought into this float, then sold out today, and then to avoid the capital gains tax, they may be putting some of that profits through their SMSF. A really interesting interview that we'll have up shortly. We mentioned Mosaic Brands, of course, warning of softening sales as the rising costs of living hit consumers, and Kathmandu experienced a slower than expected start to the key winter period. Sales in the first 3 weeks of the key discount trading period down 11.5%. They say New Zealand trade in particular remains challenging, but they do have 6 weeks left of peak winter sales, and of course the Rip Curl Northern Hemisphere summer trade still to come. And that was the stock of the day. We spoke about Kathmandu with guests Andrew Page from Strawman and Luke Winchester from Merewether Capital.
130 mil debt here on this balance sheet. That's a fair whack of debt for a business this size, particularly that earnings base contracting as well. And when you hear about covenants being tested, of course, you start to think about recapitalisation and things like that. So, look, I'm not brave enough to come and say this is the time to be buying Kathmandu or retail stocks, but I did find it interesting. You've got this big, massive downgrade on one end, but the share price reaction quite muted because the market's obviously factored a lot of that in already. So, interesting watch list for me. Let's say hold for the program. But I thought I'd just raise a few things there that I thought were quite interesting to see.
But as Luke said, you have to be fairly bold here. As the macro picture is not particularly fantastic. To me, it's just a bit like picking pennies up in front of a steamroller. I just think there are better opportunities there. And if you were particularly interested in this company, I would wait to see some evidence of the turnaround, and particularly, as Luke said, I would want to make sure that those debt covenants are not going to be. You don't want to see the company being rugged. Bankers are your friends until they're not.
All right, welcome our friend to the COB, Carl Rodder from Capital.com in Melbourne. Carl, lots to talk about, but I want to start with this big move in the yen, getting back towards these potential intervention levels.
Yeah, we're very close to 160, and it looks like we'll potentially close at a 34-year high if the currency ends the day's trade or tomorrow morning at around the 159 mark. So a couple of factors here, of course. I mean, we're seeing a little bit of strength coming through the US dollar for a number of reasons. Some of the policy decisions last night from the S&B and the BOE sort of had an indirect effect of sort of boosting the US dollar right across the board. There's also naturally been the boost of the US dollar at different stages this week because of some perceived instability in Europe. And then there's also just the fact that obviously the US dollar is looking like the least dirty shirt, if not a particularly clean shirt, in the context of the global economy when it relates to sort of growth going forward. All that combined with the BOJ last week, which was a little bit reticent on the subject of when it might hike next, certainly didn't give us any clear indication as expected when it might begin its asset tapering, or I should say that it would begin its asset tapering next week. And it's all led to this kind of mix, throughout the week, but certainly today as well, where we're at those sort of critical levels where the the Ministry of Finance previously intervened in the market. So we are certainly on watch now. You add to that too, I should say, the fact that we got Japanese core CPI a little bit lower than estimated today, depending on the estimate that you look at, but forecasts were about 2.6%, came in at 2.5%. So at the margins, that's probably a little bit of a headwind for the yen too. But overall, it seems to be one of the big stories of the day in Asia is that, we are getting to those critical levels once again. And we'll look out for any kind of rapid moves potentially in the currency. It might get a little bit, hairy out there once again.
All right, well, speaking of hairy, we're kind of seeing that sell-off that you saw in some of those tech players flow through into the region as well, particularly when you look at those Hong Kong tech players.
Yeah, and that sort of, dynamic of at the margins firmness in the US dollar, but especially, the weakness that we saw in tech last night, which looked a bit overdue. Obviously, stocks on any sort of technical indicator look a little bit overbought, and, we were sort of due a little bit of a pullback. I mean, I think the CNN Fear and Greed Index was sort of flashing sort of greed territory now, that we have this sort of unwind, sort of precipitated somewhat by some data last night, but mostly it just seemed like a market that was due for a bit of a pullback. But typically, a great rule of thumb is if tech stocks are lower and you get a firmer US dollar for whatever reason, throw in that perhaps some higher yields, which wasn't really a big deal in the last 24 hours, but can also be a factor too, that it tends to bode pretty poorly for the Hang Seng, which did have a pretty inexplicable rise in the last few days, or Wednesday, Thursday, there was a bit of an inexplicable rise. So we're sort of seeing that rally unwound a little bit. It's especially true for some of those Hong Kong companies with US listings, which probably got sort of caught up as a sort of a secondary impact of just a broader sell-off last night on Wall Street. But that was a really big underperforming market in Asia today, equity market in Asia today, and what was otherwise a fairly subdued session if you look across mainland Chinese indices. Obviously, the ASX was a fraction higher, and the Nikkei was, a little bit choppy too after some of this data and some of the speculation about what could happen with the yen. All
right, we'll bring it to our market. I mean, not really a great deal to talk about today. Maybe your thoughts on the GYG IPO yesterday and also this battle between BHP and CBA.
Yeah, the GYG situation is fun to watch. Obviously we've been keeping a bit of an eye on it just because, there's always the desire to try and eventually offer that's the platform, and especially if it proves to be a stock that is catching a lot of attention and seems to be one prone to a little bit of speculation. But it does seem to be quite extraordinary to me that we've seen this kind of 30 or 40% rally in the stock in the last 24 hours or so, and it's at sort of eye-watering levels if you look at the multiples. So it sort of makes you wonder whether this is a little bit of irrational exuberance or some sort of irrational behaviour that might be driving the price action. I suspect that in the next 4-6 weeks or so we might see the stock back towards its kind of listing price once I suppose some of the big players get out, find their exit liquidity, and can burn their cash on something else. I can't really see that this could potentially last, just given the business model and, again, considering the multiples it's already trading on. But nevertheless, I think everyone just got excited at the fact that it was an actual IPO, a rather large one on the market. And yeah, we're keeping an eye on it too, because it seems to be attracting a little bit of attention from traders who might want to, maybe counter trends or at least get involved in a little bit of the exuberance.
Yeah, it's a fascinating story. I was actually having a great chat with Liam Short, who I know you know well too, about people that maybe made a quick buck and then put all of that into their SMSF to avoid capital gains tax. But anyway, people that are more clever than me doing those kinds of things. Let's talk about the PMIs and what that's going to tell us about growth momentum in some of the world's biggest economies.
Yeah, so it looks like, we've already had Japan's out today, and that was a little bit softer than expected, the flash PMI surveys. The European and US numbers obviously will be very interesting. Europe looks like there's going to be a little bit of a pickup in economic activity right across manufacturing and services, but it's still in sort of contractionary territory, so it's going to be below 50, just higher than the readings in the previous month. But the US surveys will be the most interesting sort of dynamic, because there's two things that we're going to be watching. Obviously, it's the headline number, and it's expected to moderate slightly, but remain in expansionary territory, so it's just a slower growth momentum, but still growing. But the key detail, I think, will be, especially in the services survey, the price sub-index. What we saw a couple of weeks ago with the ISM figures is a really strong reaction when the headline number came in stronger than expected. So again, showing an increase in economic growth momentum, but there was also a marginal drop in the price sub-index, which kind of paints that Goldilocks picture of an economy that can continue to grow while inflation continues to subside. So I think that might be the kind of highlight of the day's trade potentially. It certainly will sort of provide us a bit of a crescendo today for the markets, especially after last night's drop. Of course, if we see anything that runs contrary to that, especially if the price sub-index proves a little bit stronger than expected, and heaven forbid we get an even weaker number on the headline basis, well, that's the kind of thing where markets will get a little bit cautious, maybe start to revise expectations about rate cuts this year. But again, we'll see how we go. If we do get that kind of high headline number and the drop in the price sub-index, then it might be a bit of a bullish catalyst to finish up the week.
Thanks as always, Kyle. Have a fabulous weekend. Kyle Rodder from capital.com. The market has closed. Let's have a look at the leaders and laggards in the day's session on a day when, as we say, there was a little bit of a battle between BHP and CBA when it came to the big caps. BHP still just kind of edging out CBA there, though, that did hit a record. I'll just tell you, when I look at the ASX 200, what some of the leaders and laggards were. Stanmore Resources was up 4.8%. Helia Group was up by 3.9%. Alumina up 3.8%. Strike Energy had a gain of 3.5%, and Karoon Energy was up 3%. To the downside, Mineral Resources off by more than 6%. They're down 7%. IGO was also a laggard, off by about 5%, along with Liontown Resources, Judo Bank, and Pilbara Minerals. Having a look at the smaller end of town when it came to the leaders, Talga had a good day, up 20%. Amero International, Renascor Resources, Aurelia Metals, and Frontier Digital. To the downside, we saw weakness coming through in these stocks on your screen, including Dimerix, which was down by 7.4%. Well, it is a Friday. Let's have a look at what we are seeing. Kyle was telling us about the PMIs, the US S&P Global PMI, a key one to watch, along with UK manufacturing PMI. We've also got some home sales data in the US and the Conference Board Leading Index. Looking ahead to next week, Consumer Sentiment Index for June, the monthly CPI, and we're going to speak to Stephen Koukoulas, the Cook, about that on Wednesday. We've also got a couple of speeches from RBA Governors, the Assistant Governor Chris Kent, the Deputy Governor Andrew Hauser, and job vacancies for May coming through as well. Overseas, we have the PCE core deflator for May, which is the key one. China industrial profits for May as well. Consumer confidence in the US and a raft of other data, including the Dallas Fed Manufacturing Index and home prices for April. Well, we finished the trading week on a positive note, a 0.4% gain there on the CBO 200. When it comes to the ASX 200, it has closed the session higher by, I think, 26 points now, a third of 1%, 7,796. We talked about Strike Energy and Helia being very strong gainers. And over the last 5 days, the index up 0.9%, just 1.5% off its 52-week high. Well, a busy week ahead next week. Of course, the last week of the financial year. We've got a number of great guests to talk you through that. I mentioned the Cook, but please do join us from 9:40 Eastern. And until then, have a safe and happy weekend.
The COB is brought to you by Pepperstone. Trusted by traders in over 160 countries.
Gil.
Oh, hey, Ken.
Here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible! 1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful! It's a bit intense.
Be better!
Still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.